outlook, we expect that the central bank will be very cautious as they continue to cut the policy rate because they continue to prioritize stable exchange rates and stable prices. In 2026, Ghana will exit the IMF program, which is currently ongoing. And typically, IMF programs tend to give investors assurance that the government would be prudent in managing policy. With the end of the IMF program, this could cause some elevation or increase in uncertainty about the policy outlook. So this again could play against the cedi. So in this particular environment, our expectation is that the central bank would remain very cautious, and we won't see, most likely, we won't see aggressive cuts in the policy rate as we saw from July to date. Now, with the appreciation of the cedi or the improved performance of the cedi, we've seen it feeding into inflation, where it has helped to reduce inflation from almost 24% at the end of last year, currently at 8%. Our expectation is that it drops further. So remember, like I said earlier, the exchange rate jigsaw, once it has been moved, it has allowed another jigsaw, which is inflation, to move to where we want it to be, which is a low inflation. And low inflation means that prices of goods and services are moving in a predictable manner, or are increasing, but in a predictable manner. This therefore means that once we enter into 2026, the rate of increases in price of goods and services should be predictable, and the expected return on passive conservative investment would also be lower. For the outlook, we expect that inflation will remain generally low, and our forecast is to see something between, or likely between 9% to 11% by the end of next year, average of about 9% in the course of next year. There are upside risks and downside, meaning there are risks that could push inflation up or risks that could help it stay low. One of the risks that could push inflation up is expectation of utility tariff hike early next year. Electricity tariffs and water tariffs would go up significantly next year. Those could cause an increase in price of goods and services, or inflation. Now, as a result of that, the expectation is that the central bank, again, will be cautious when they try to release money supply into the market. But then there are also factors that could prevent it from moving up fast. In the 2026 budget, the Treasury has announced some reforms in the value-added tax, or what we call VAT system. And basically, they've removed the COVID levy. They've also ensured that the effective VAT rate is down from almost 22% to 20%. What this means is that you won't have to pay a significant amount of tax on goods and services that you purchase. And once that is the case, then your purchasing power is restored by a certain margin. That could also mean that prices of goods and services will also not go up, because it's typically priced or built into the prices of goods and services. It also means that cost of production for businesses would also be likely lower. So the edge or incentive to increase price will also be lower. This should help to reduce pressure on prices from going upwards. Now, with expectation of lower increases in prices of goods and services, we expect that interest rates would also remain, at least on the short-term investment instruments, will also remain low. We've seen a sharp decline in interest rates on Treasury bills from the start of the year, where we had an average of 28, 29%. We are now down to between 11% to 13%. We expect that they remain in low double digits over the course of 2026, partly because inflation will also remain low, and also because the Treasury or the government would also be very careful in how it borrows from the domestic market next year. All of the budget financing that will be done next year will be from the domestic market. However, the approach that will be used next year will also reduce borrowing from T-bills, and they will go into bonds. Now, because inflation will be low, our expectation is that the Bank of Ghana will continue to cut the policy rate. But there's a line that we would like to also remind ourselves from the 2026 budget, and I quote, "Monetary easing will be cautious and conditional on continued stability." That's the first part. The bank, that is the Bank of Ghana, stands ready to act swiftly should inflation risk resurface, unquote. Now, the first part is saying that monetary easing will be cautious. It means that the Bank of Ghana would continue to ease. Easing means reducing the cost of credit, meaning cutting the policy rate. So we expect that the Bank of Ghana would cut the policy rate in November this year and in the course of next year. However, it will be conditional. It will be subject to continued low inflation. So if inflation remains low, then the Bank of Ghana will continue to cut the policy rate over the course of next year. So they will be very cautious. Every decision they take will depend on where they see inflation moving. And if they think that there's a risk that can push up inflation, like I mentioned earlier, the utility tariff hike, then they may not cut. They may wait to see how it behaves before they take the next decision. What it means is that return on T-bills will likely remain low, but then if we want to improve return on investment securities, then we now need to look at the longer end of the investment spectrum, talking about bonds and risk assets such as equities. Now, I would like to wrap up on our key observation about the 2026 budget and what it means for the economy and the investment landscape. At the top of the slide, we have actually provided what the key macroeconomic targets are or macrofiscal targets are for 2026 and what we expect will drive those targets. But what I would like to zero in on are the revenue initiatives, the implication for investing, the spending plans, the implication for investing, and the asset views are as we see them. The VAT reforms would mean that consumer goods sectors will experience lower cost of operation. And what it then means is that investors would have more purchasing power. This is good for consumer goods sectors that are listed on the Ghana Stock Exchange. Now, government also plans, in terms of the spending, government plans to do a lot of infrastructure spending, particularly construction. So we expect that construction sector and all the ancillary economies like banking, because contractors will seek financing from banks, banks will have opportunity to increase their lending, transport, all marketing companies will see demand for fuel. Now, road construction also relies a lot on bitumen. There is an oil marketing company that is listed on the Ghana Stock Exchange that is into the production of bitumen. So they could see demand for bitumen, and that would help their top line and their profitability. Government also will be paying arrears of contractors. That is good for banks because one of the reasons why their loans are not performing well is contractor arrears that are not being paid. But once government continues to pay contractors, estimated at 30 billion cedis next year, loan performance should improve and banks should be confident enough to start giving loans to the real sector. Then finally, what is our asset class view? We believe that next year, the main juice up in returns will be on the medium to longer end of the investment space. So looking towards your bond space and your equity space, especially in the light of the fact that government will be returning to the bond market next year. So that creates opportunity to look at bonds and invest in bonds, as well as the equities play based on the spending plans that I just mentioned and the implication for oil marketing companies, banks, and fast-moving consumer goods sector. At this juncture, I'd like to say thank you very much, Nebuke, and happy to hand over the mic to you.
Thank you so much for that, Courage. That was very informative. I mean, I've taken so many notes. But even before we move on to the next section, I wanted to ask, when you were reviewing the 2026 budget, is there anything that shocked you? Is there anything you didn't expect for next year?
No, I would say that most of our expectations were realized in the budget. So one of the things we noticed was that for the second consecutive year, the budget did not impose new taxes. You can call this a surprise, right? Because in recent years, we've been used to taxes in budgets. But in 2025, there were no new taxes. In 2026, there will also be no new taxes per the 2026 budget. Now, this just tells us that the authorities are prioritizing continued stability in 2026 because taxes could cause an increase in prices. And so they do not want to start that pressure right now. So they want to strengthen the stability. And I think that that is one of the things that pleasantly surprised us about the 2026 budget.
Oh, that's amazing. Thank you so much for sharing. So at this juncture, I would like to pivot to our next person that's speaking today, and that is our portfolio manager, Herbert. He is going to be talking about the fund performance review, evaluating how funds performed in 2025 and the key factors that influenced outcomes. Strategic outlook on 2026. He will present key investment strategies and focus on areas for 2026. There will be talks about market alignment. So he'll discuss how the fund is positioned to capitalize on market opportunities and mitigated potential risks. So over to you, Herbert.
Good morning, everyone, and thanks a lot, Nubuka. Thanks a lot, Courage, for the presentation on markets. So we are looking at the fund's performance so far year to date. And as of 18th November 2025, the fund has returned 17.6%. This has honestly been one of the most challenging markets we've had to navigate, especially for IC Liquidity Fund. We had a volatile interest rate environment, i.e. start of the year, interest rates started declining from March, and we've seen about 1,500 basis points drop in rates. And we saw the CD significantly strengthening as well. Now, I know most of you check your IC World app every day, and you do see some fluctuation in the performance of the fund. And there is a reason for that. So sometime last year, we decided to take a position in US Treasuries. And the reason behind that was to mitigate against currency or volatility risk. And we saw the CD strengthen significantly this year, and that's also impacted the performance of the fund. So the sharp drop in interest rates and the fact that the CD strengthened against our expectations is what caused the swings in performance that you've seen so far this year. But nonetheless, what we've been doing is to actively manage the portfolio and ensure that returns stay afloat. So again, 2025 has been one of the most challenging markets to navigate, but we've been able to keep returns and performance afloat so far this year. And just touching again on the swing. So this is showing the net inflows into the fund. And you can see between the period of March and then May, we saw a sharp decline in the net contributions into the fund. And for obvious reasons, the fact that we saw a sharp decline in rates, we saw the CD strengthening, and that was impacting the stability of the fund's performance. But nonetheless, I think year to date, the AUM of the fund has grown by almost 100%. And that speaks to how consistent we've been in ensuring that returns have been sustainable throughout the year. The last slide is looking at our asset allocation. So comparing last quarter to this year, we see that we still have a significant portion of the portfolio in liquid assets, i.e. repos and fixed deposits. So those form about 80 to 85% of the portfolio, and we have a minimal allocation to treasury bills as well. Yields on treasury bills have declined, so we've kept our holdings very minimal, and we continue to look at repos and fixed deposits. Currently, comparing the rates get on treasury bills to repos, there's about a 300, 400 basis points spread we currently get on repos and fixed deposits, and so we've kept a significant portion of the portfolio there. The last slide is looking at outlook and strategy. So I think from the budget and from even Courage's presentation, we do expect the government of Ghana to return to the bond market sometime in the first quarter of 2026. And with that expectation, we believe that investors are going to be looking at the secondary bond market and trying to assess which bonds they can currently buy against new issuances that may come during the next quarter. So just even from the decline in treasury bill rates, we've seen significant activity on the secondary bond market. And we think that this trend is going to persist into the first quarter of 2026. On policy rates, with inflation now in single digits, we think there's still scope for an additional decline in the policy rates, and that would affect the rates that we are currently getting on the repos and fixed deposits. So when you do see a slight drop in the returns, it doesn't mean the fund is underperforming, but it's just because the macro conditions have changed. Inflation is now lower. The government of Ghana can now reduce interest rates, and that in fact affects all other benchmark rates, like the rate of fixed deposits and repos. How do we navigate this new environment? I think when you compare the Treasury bill rates to the performance of the fund, Treasury bills are currently doing between 12 and 13%, and the fund is returning roughly 17.6%. And the reason for that is at the start of the year, we started to position ahead against the expectation that rates would also significantly drop. And so that's what we've been doing so far for the greater part of the year. We've been locking in yields at the longer end, and we've also maintained an underweight position on Treasury bills because the yields on Treasury bills currently are not favorable for the fund. So going into the next quarter, we are still maintaining our duration extension strategy and trying to lock in yields for as long as we can. And we continue to keep our Treasury bill exposure minimal due to the low yields they currently offer. So in summary, like I did say, this year has been challenging, it's been tough, but we've been able to ensure that performance of the fund has been sustainable. We've kept our duration extension strategy for the greater part of the year. And for the swings in returns, it's really due to the fact that the market has changed. Interest rates have significantly dropped. Inflation is in single digits. We have a stronger currency, one of the best performing currencies in the world. And that has contributed to the swing in performance. So that's in summary the presentation on the performance of the fund. Thank you.
Thank you so much, Herbert. There was a lot of good nuggets in there. Okay, so let me ask you this. What are the projected economic growth opportunities in Ghana for 2026? Somebody was asking, particularly in the key sectors like agriculture, technology, and mining. What do you think the projected economic growth is?
Well, I think I would just step in to pick the question up. So like we saw from the 2025 budget, the government has indicated.
Yeah, I'm giving that.
Sorry. So
yeah, I think
the government has indicated that it targets to record a 4.8% overall GDP growth. But that is the minimum, because if you look at the phrasing of that sentence, it said at least 4.8% overall GDP growth. So we expect that the actual outcome will be greater than 4.8% if all goes to plan. Now, the expected increase in expenditure that will drive the growth, 66%, over 66% of that will go into capital expenditure, right? And so we expect that the growth drivers would be infrastructure spending by the government on roads, and roads will dominate the infrastructure spending. So on roads, on energy sector, as well as agriculture. So these are the key sectors that will drive growth for 2026.
Very helpful, very helpful. And what about the IC liquidity fund? Will the interest rates for IC liquidity fund be increased in the next year is what somebody's asking. And just a reminder, there is a Q&A function. So if you have any questions, please feel free to drop them in there. This event is also being live streamed on YouTube. So this you can go back and play back. And if there's any questions that you feel like we breezed through and you want to go back and listen to what the answers are, you can go back as well on YouTube. So Herbert, somebody's asking, would the IC liquidity fund increase next year?
That's a good question. I think, like I did mention, the landscape has significantly changed, and what we are trying to do as much as possible is to make sure that the performance is sustainable. So you don't want to be seeing sharp swings in the returns of the fund. And I did mention that with inflation now in single digits, what it means is that the monetary policy has further room to cut down rates. The rates yield we get on fixed deposits and repos, they are tied to the monetary policy rate. So when that rate drops, it does affect the rates we get on the fixed deposits and repos, and that will translate or feed into the performance of the fund. But we are always actively managing the fund and ensuring that the return stays afloat and sustainable. Thank you.
Amazing. Thank you so much. Very, very helpful. And again, if you have any questions, you can put them in our Q&A box. There is somebody answering those, and there will be a section at the end of the call where we will answer some of your questions. So without further ado, I would like to introduce the next person who will tell us a little bit about the markets. Alan, the head of global markets, will come on to talk about the Ghana Stock Exchange. He will give us insights, share expert views on the Ghana Stock Exchange performance and direction. He will highlight some of the key stocks, ETFs that customers need to pay attention to in 2026. So hello, Alan, and we'd love to hear from
Thank you so much, Booker. Please confirm if you can hear me.
Yes, we can hear you. Thank you so
Great.
much.
Thank you for having me. Thank you, Herbert. Thank you, Courage, for your presentation. Yes, on the Ghana Stock Exchange. So this year we've had a notable year. We've had a stellar. The exchange has had a stellar performance. We are currently sitting at 72% overall for the exchange. The interesting thing about this year is we've had performance across the sectors, instead of it being stuck in the telecoms and the banking sector. We've seen it across the consumer sector, the finance, and the telecom. Obviously, this year, on the back of a stable currency, disinflation, we've seen an environment that allows key corporate earnings to function like a real stock exchange should. And so that has been the main catalyst. We're also seeing very much a refreshed investor interest in Ghana due to the stable cedi. It gives investors the avenue to plan ahead confidently. We think this momentum is going to trickle into next year. We're going to see more foreign clients. Also, interestingly, we've had last year we had above 600% participation from local retail investors. This year we've had an additional 42. So that means that we are seeing quite a healthy mix of investors across institutional and retail. I think the momentum will also trickle into next year, where we're going to find retail investors being interested in more than just the telecoms. We're thinking we're going to see more banking stocks and consumer stocks. And that is essentially has been the performance of the Ghana Stock Exchange. I reckon we'll have more questions from this segment, so I'd rather keep it short and take questions from you if you have any.
Yes, we have loads of questions for you. You touched on the GSE's performance over the past months. What do you see as the main catalyst behind the outperformance?
The main catalyst, as I mentioned earlier, has been an impressive cedi. We also have seen resilient, or you can say, fiscal consultation from the government. Refreshed investor sentiment has also been a key driver. If you look at the stock exchange, you have seen double-digit growth across banking stocks to consumer and the telecoms. We don't see this going anywhere. We've seen a resilient banking industry, banking sector. We're also seeing a very resilient consumer basket. We've seen a healthy mix of products. We've seen a very steady control of cost, and we know that it's going to trickle into the bottom line soon. Many experts think that will be the first sign of recovery when we see disposable income trickle into the top lines of these tickers. And so the main thing really has been a resilient macro environment. This corner that Ghana is turning doesn't look like it's going to stop anytime soon. If we do see a full turn, we're going to see a market that is independent to grow on just corporate earnings and corporate actions.
Okay. So does IC have any plans to make available foreign equities like US stocks and ETFs?
I think that's the question that everyone's been asking. To touch on that, I think we also have to. I don't want to miss out on the conversation of. I think this is a perfect time for product creation. I think what we're going to see next year, not just IC, but we're going to see more diverse products in the market. I think everyone's looking to diversify, and so that is essentially one of the things that the market is looking towards. In terms of access, like I said, I'm pretty much excited about the opportunities in country. I think when you buy a stock on the stock market, the title that you have, a lot of people discount it. You essentially become a shareholder. We have the avenue to invest in companies that we have the opportunity to grow with. And so when people invest in the stock markets, I don't think that shareholder title should be discounted. And I think that same line of view should be looked at when investing in. We see a lot of investors jumping into stocks merely on the rally of mainly on price rallies. And let me also mention this. I've had conversations with a few investors where they think the year-to-date performance of a stock is essentially almost like the coupon rate they're going to get from it. And so it's good to speak to your investment advisor, but at the same time, also it's good to have the lens of looking at you investing in a stock as you becoming part of this company. In terms of exposure, there is the new gold ETF on the market. I am sure next year there will be a diverse set of products that should give the local Ghanaian investor a deeper diversification in their portfolio.
Okay, I like this. I like this. I'm very excited for the future. And okay, so what are we thinking the top picks on the GSE are going to be in the next year?
I would like to refrain from mentioning particular stocks, but I would say the banking baskets is definitely going to lead the growth next year. We're seeing a lot of intention to improve asset qualities. I was trying not to say it, but there are a few tickets on the boards that are prioritizing growing their loan book and also cleaning up their asset quality. So I think we've already had a few. I think next year we'll see a lot more valuation catch-ups, but there is still some attractive multiples that we can trade at. And so I'm looking at the banking stocks. The second sleeper would be the consumer stocks, as I mentioned. You are looking at translating when we have more disposable income. We're going to see that as the first sign of recovery. These guys have spent this year basically controlling costs and looking at their product mix. And so I think next year, if Ghana turns the full corner and we still have a resilient macro, to be a beautiful stage for consumer stocks to flourish.
Amazing. And then my last question, because we are bringing a lot of questions in. There have been many reforms in the Ghana Stock Exchange. Recently, even the recent separation from Momo, from Scancom. How do you think these changes will affect the market as a whole?
If I understand, you're talking about the regulatory changes in the CSD.
Yes.
I think change is always difficult. It's always not that easy, but I think the intention and the benefits are there. But can you repeat I don't think just for MTN?
No, not just for MTN, for multiple stocks. So we've seen that there's also been the change in Calbag as well. So there have been multiple different changes. How do you think all of these different reforms on the GSE will affect? How do you think these changes will affect the markets as a whole?
I think these changes, the intention of these mergers obviously are not leaving out the welfare of the investor. I think we're going to have a much deeper and more transparent market. And I think even us being aware of all these changes is also a plus that we need to give up to the exchange.
Very helpful. Thank you so much. Okay, so again, please don't forget to put your questions in the Q&A box. We will now be heading to Josephine, an associate on our wealth management team, who will give us more information about the wealth app updates and address some of the questions you have.
Hello, everyone. Nice to meet you. My name is Jocelyn, and happy to be here. So we just want to run by you if we currently have on the app based on the feedback that we have received, and to let you know that yes, we have you in mind always. And so I'll just go over a few of them quickly, and then we'll proceed to take some questions. So we advise that our users state their app to the current versions that we are going to see are particularly linked to the trade. So once you log in, you will see live chats, which gives you the current market value of your shares instantly. You know, it doesn't keep you guessing anymore, thinking what the price is trading at currently, or what is going to cost me to buy this number of shares, or is it going to be a quick sale or a quick buy, and all of that. So it's just going to be easy, granting you easy access to, you know, the live market. It gives you a full trading suite, which gives you access to buy, sell, or cancel your stocks directly on money between your portfolios, where you are able to deposit, withdraw, and then move funds instantly between your trade live and then ICLF portfolios. And you'll receive notifications in terms of what the timelines are, when you'll be able to see the funds in your account once you invest, and all the relevant details that you need for your investment. For your CSD request, we are having a lot of complaints that you check your emails. You also check the progress is easily to track on the app. We are able to get you notice if your account has been rejected or there's any issue. So we advise that you check your emails constantly as you go through the process flow of setting up your account with us, which is very relevant. Again, the information that you provide is also relevant to setting up your account. So we will help you get it right and then help you trade.
Thank you so much, Josephine. Thank you, thank you, thank you. Again, if you have any questions, please put it in the Q&A section. We have some questions that have come through as well. So I'm going to throw out some questions, and we have the team to be able to answer some of those. So this is for Herbert, and the question is, could you explain to us the decrease of the annualized return rate on IC liquidity fund from 18% 3 months ago to 17.5% currently?
Sure. Thanks a lot, Nibuka, for the question. And so 3 months ago, we had a USD position in the portfolio. USD is US Treasury. So when we look at the historical performance of the CD, one of the things that we noticed, first of all, was that the CD tends to significantly depreciate in the first quarter of the year. And historically, the CD has depreciated by about 10% annually against the dollar. And so in trying to hedge against that currency risk, we decided to take a position in US Treasuries, but we have seen a strong CD this year. So that expectation didn't play out. And that contributed to the decline in the performance of the fund. So 3 months ago, we had that position, but as of today, we have exited our US Treasury position. And as and when we believe that it's the right time to re-enter into that asset class, we will do that. Thank you.
That's amazing. Thank you so much, Herbert, for sharing that. My next question is, when will ETFs and mutual funds be made available in the app for trading? It's a question that we have. Okay. We currently have ICLF, which is our mutual fund. So if you want to invest, ICLF is an option for you to invest in the app. Okay. So we have another question that goes, can you guys throw some light on the MTN Momo FinTech merger? How does it affect MTN shareholders? Harish, that is over to you.
Right, thanks. So I guess the question is on the separation of Scancom and Mobile Money Limited. So there is an EGM that is planned for investors in early December. I believe that MTN would require investors to actually vote for this to happen. And this is actually a requirement, a regulatory requirement that has to be met for MTN Momo to continue to operate. It's a Bank of Ghana requirement, and it's an act of parliament requiring that. Now, because Momo is currently part of MTN, shareholders in MTN automatically have shares in Momo. And so there's a need to vote for this to happen. So investors will be required to vote. Now, beyond the voting and allowing this to happen, in terms of economic interests, your benefits in both entities do not change, because even though mobile money will be separated from the GSM arm of the company, your interest that you already have in mobile money via your holdings in Scancom remains. That mobile money entity would not be immediately listed on the exchange. It would be in the future, but there will be a trust entity to hold your interest. And so when dividends are declared, they will be paid to you from those two entities. So economically, your economic interests in those two entities will not change. However, as a shareholder, you'll be required to vote for that regulatory requirement to happen, which has to happen in order to safeguard the continuity of the business.
Thank you so much, Courage. Thank you so much. Okay, so we are getting a couple of questions about CSD and contract notes. So I'm going to pivot to Josephine right now, who will answer some of the questions. So there have been a couple of delays, and yeah, pivoting to Josephine to be able to answer and speak on these delays.
Okay, so with regards to CSD account setup, basically we need your correct data to set you up, right? And so if you provide us wrong data, we are not able to set you up. We would usually come back to you via email requesting for the correct and relevant data to help set you up. So as you can see on the screen, once everything is ready, you get a notice that says that this is in a processing time of 3 to about 4 weeks. If there are issues, mostly it comes in the form of pictures, that we are you are unable to pass the CSE's verification system, and so we are not able to set you up. And so we come back to you with assistance on how to take a correct picture, also upload your clearer Ghana card ID, and then we'll run it again and give you feedback, which is hopefully a successful one, that your account has been set up. I'd like to stress on the fact that your picture has to come with a plain background. We do not need to see any earphones or any foreign materials. It just has to mimic an official passport size photo for verification. The other issue too will be with regards to say your signature or your bank details not available to enable you set up, because bear in mind that once you invest, you'll be receiving dividend payments, you'll be receiving other relevant information. So particularly your bank details are very relevant to set up your account.
Okay, perfect. Thank you so much, Josephine. Okay, so I have another question. And it is, please, why don't I receive my contract notes when I purchase shares after this has been executed?
I would like to apologize for the delay in receiving. I would like to apologize for the delay in receiving your contract notes. However, in December, we are going to deploy a feature which allows you to download your contract notes directly from the app. And I hope this will help greatly.
Yeah, thank you. This will be a great help. Okay, so I have a question for Herbert, the portfolio manager. Is the ICLF open to explore other investment options, provided that the fund's exposure to a cut in the policy rate is high?
Okay, so I think one of the things I did highlight was, despite the fact that we have single-digit inflation, there is still some room for a further policy rate cut. And we have our repos and fixed deposit rates tied to this policy rate cut. So what we've been doing with regards to this expectation is to extend the duration of our portfolio. What I mean by extended duration is when we look at the fund, we have investments in short-term maturities like 30 days, 60-day, 90-day investment. So the longer you lock your money for a higher yield, when rates decline, you don't have to reinvest maturities at a lower rate. So we've been conducting or undergoing that duration extension strategy for some time now. And we intend to do that for as long as we can lock in rates at a higher rate. So with regards to the decline or expected decline in the policy rate and how we're mitigating that risk, we are going to continue our duration extension strategy. Thank you.
Amazing. Thank you so much. My next question is for Alan. I noticed most of the equity instruments, GOIL, GCB, etc., I've tried to purchase, always have expired. Why is this?
Thank you so much, Nubuke. Simply put, I think we've encountered this problem, and I think the simple explanation to this is most of the stocks that our clients are interested in have limited liquidity. Now, what that means is that clients will have to monitor the market, and what that also means is you may have to speak to your investment advisor beforehand to understand the liquidity in the market. Now, liquidity means if you're buying, you are able, you have access to a seller that's willing to offload their shares to you. I understand that a lot of clients simply think that putting in an order means there is already a sitting buyer in the market. That is not the case. The exchange essentially matches a buy and a sell order. So when your order sits in the market for a number of days and it gets refunded, it means you are not able to match with the seller. There are a few stocks that have been a bit notorious with liquidity, which is most often the stocks that are most sought after. And so you may have to price competitively if there is a seller in the market, or simply monitor the market until there is liquidity. And so I think people should take this into consideration. I hope this helps.
Yeah, that was very helpful. Thank you so much. Okay, so back to questions on CSD. Can you please speed up the process of creation of a CSD account, Josephine? That is over to you. And why can't you do this?
It all depends on good information that we receive. But then again, before I throw more light on that, I'll just piggyback off what Alan said. Also in the app, we have made this available so much so that you're able to see the volume on the sell side and then the volume on the buy side. And so if one side is very heavy without any match on the other, on the buy side, you know that your orders are going to take some time. Okay. All right. So back on to why your CSD account creation takes a long time. If I need your name, if I need your date of birth, if I need your picture and you are not giving me all of that, I have to come back to you. I do come back to you. You have to provide it for me. If you do that, then we are all aligned. And then within a space of 48 hours, I'm sure I can set you up. Right? Yeah. And so once again, once I'm done with my side, there's also an approval process by the CSD, which also takes a few days. And so once the account is set up, we send you a notice right away that your account is ready for trading. And then, yeah, we are all good to go.
Okay, and just to reiterate, there is an option to update your information if your CSD has not been approved. All of these functions are in-app, and we will also send you a notification. So at every step of the journey, we will prompt you to say, hey, there's some information we need, and we will be able to help you. Okay, Josie, I have some more questions for you. And it is, how do I invest in treasury bills? I couldn't find this via the app. And then also, I want to know if individuals below 18 can begin investing with IC.
Okay, so I'll take it. I'll take the second question first. So you can invest with IC if you are 18 and above per the law. You cannot invest if you are not 18. However, an adult can hold an investment in trust for you until you turn 18, when you can take over. And the second question again, sorry. Treasury bills. Okay. So if you click on the Trade Life portfolio, we have the fixed income and the equities tab available right at the top. You see equities and then fixed income. So you just switch between the two of them. Once you click on the fixed income tab, you are able to invest, you're able to transfer, you're able to withdraw. You see all the fixed income instruments that we have available, which is GOG 91 day, GOG 182, and then 364 day bill.
Amazing. Thank you so much. That gave me some more clarity. Okay, so my next question is, how long does it take for my holdings to show after a trade? Can you speak on the settlement windows for both fixed income and equities?
Okay. So once you put in your order, as stated earlier, the trade has to match, right? Once the trade is executed, that is, we were able to buy or secure the shares for you, the money has moved to whoever bought it, right? It takes 3 working days for the trade to settle. That period is what we call settlement, right? Whoever bought the shares must receive the money. Whoever bought the shares must receive it, and then whoever sold to you must receive the cash. Now, once that is done, the shares will be available in your account, and that takes 3 working days. So you first receive notice of execution, which will come with a contract note stating the settlement dates and other trade details, like how much was used to buy the shares, and then the quantity that was bought for you, plus all the charges as well. And then on the 3rd day, the shares will be available in your account. On the fixed income side, we take your bid, it goes to the market. We go to the markets for auction. Once we are able to on Friday, which usually happens on Fridays, once we are able to buy for you, it becomes available in your account on settlement date as well, which is the Tuesday of the following week.
Thank you so much. That was, again, very, very helpful. Okay, so just a reminder that the call is available. So a recording of this is available on YouTube. So if you have any questions or you've asked a question and you want to rewind, this will be recorded and available on YouTube for you to be able to see. Now, a big question that we have been getting is, how do you contact IC? I'm calling, I'm not getting a response. And we actually have our contacts available on WhatsApp. So our chatbot, Irama, is available to answer a lot of the questions that you might have. So if you have accounts or if you have questions specific to your account, with the number that you registered, just WhatsApp our AI bot, Irama, and you can ask us some questions. So for example, I put in a trade, when is it going to be cleared? Irama can answer that question for you, or any questions that are specific to your account. So if you have anything and you need help with this, we are able to ask you. Yes, remember, if you have any more questions, please go into the chats and ask the questions there. We're available to answer some questions. I see some questions about the recent measure as well. It says, what happens if you missed the opportunity to vote? So any questions you have with regards to the fintech, the Momo restructuring, there is a link that is provided in the email that we send all stakeholders and all shareholders of MTN. So if you click on that link, it will redirect you to an FAQ section that will answer all your questions. Okay, so the WhatsApp graphic is now on the screen. Please make sure that you are screenshotting it. Please make sure that you are making note of this number. Make sure that you send all your questions to Irama. She will also be able to answer those in particular. So we have 1 more minute on the clock. If you have any questions, we are also going to drop a link in the comments section below so that you can go and escalate some of your problems there as well. Courage, can we speak on what might cause any bond holders who took a haircut on Ghana's bonds to consider investing in Ghana? What happens from
Yeah, this is
that?
a very important question, Bouquet, and thanks to the questioner for bringing this up. So the question is, what got us there in the first place? As a country, we borrowed beyond our capacity to pay, and we also couldn't manage the exchange rate well because we have foreign currency debt in our debt stock or portfolio. Now, what have the authorities done, or the Ghanaian government done to ensure that we reduce the risk of this happening in the future? One of the things that the 2025 budget has done is to amend, or should I say, improve upon the existing laws that guide how government manage their finances that leads them to overborrow. So for instance, one of the changes to the laws is to ensure that any given year, when government takes its non-interest expenditure out of its total revenue, there must be surplus. And that surplus, when measured against our total GDP, it must be not less than 1.5%. What this will do going forward is that government would now have surplus to be able to pay interest, and they only have to borrow a little more to continue the obligation that it has on interest. So it means that the rate of borrowing going forward will reduce. And once the rate of borrowing going forward reduces, the risk of defaulting on your debt that will lead you to another potential haircut in the future, that risk is lower now. And I guess that should comfort investors. Another layer of comfort is that another change to the law is that from 2034 onwards, Ghana can no longer, or should no longer, have a debt to GDP ratio above 45%. I mean, why we had to do the haircut is because our debt to GDP ratio increased above 100%. That will no longer be allowed from 2034 onwards. On exchange rates, the fact that there is a new entity now that ensures that we rake in a lot more foreign currency for ourselves will help us manage the exchange rate better going forward, and the changes in the exchange rate will not cause our debt stock to rise beyond our capacity to pay. So these are the changes that the government have done that should ease market or investor concerns about buying government bonds in the future. I hope this helps.
It does help. It does help. And I guess my question is, as well, is for T-bills. Do you think we should look at getting some more T-bills next year?
Well, whether a yes or no answer will depend on what your investment goals are for the coming year, what your risk appetite is for the coming year. And this would have been my wrap-up comment that for the coming year, whilst we expect return on low-risk investment to be low, and the market may be chasing high returns, you need to balance the expectation of high returns with your investment goals, your need for quick cash, and most importantly, your tolerance for risk. Because it's always said that the higher the risk, the higher the expected returns. However, when you go into the chasing of returns and you forget the risk involved, it may work against you. So whilst we go for higher returns than T-bills, we need to measure that against our ability or willingness to tolerate risk. And that is why we will need a credible, licensed investment advisor to walk this journey with us through 2026.
Okay, amazing. Can you speak on the Momo FinTech merger? Do you think, could you speak on the Momo FinTech merger? Can you give us a little bit of insights into this?
Yes, I did that recently. And maybe what I would just summarize is to say that if an investor is afraid that this will have a negative impact on your interest in Scancom, you have no fears because your interest or your shareholdings in the two entities will be protected, right? So when dividends are paid by the two entities, you still get your share of the dividend. However, as a shareholder, you also need to vote for this to happen because this is a regulatory requirement that the Act of Parliament requires under the Bank of Ghana as the regulator in the Momo space to happen. So as shareholders, we need to vote for this to happen, but it does not have a negative impact on our future interest in the company.
Amazing. Thank you so much. And just a reminder, if you have any more questions on this, we sent an email out with links that you can click on to find out some more information. If you also go on ic.africa, you will also have access to, in our Insights tab, under personal investing, there's also some information there about this more fintech merger. Now, if you have any problems as well and any more queries, there has been a link that has been dropped in the chat that will take you to a page where you can put all your queries down and somebody will answer them. Again, we also have our WhatsApp app on the screen. Please remember to screenshot to take note of this number. If you have any specific questions, they will be there as well. You can ask our AI bot, Irama, and she'll be able to answer that as well. So thank you once again for coming to our last investor call of the year. It has been a pleasure to engage with you. It's been a pleasure to answer some of your questions. It's been a pleasure to share with you. And we can't wait to see you next year. Thank you once again. And we will be in the chat asking some more questions answering some more questions as well. Sorry, everybody. Thank you and see you next year.